mentioned before, that it's like some of the stable coins are not even audited. So you have basically these opaque entities whose business model is, they're going to issue stable coins and they're going to back them supposedly one-to-one with, U.S. Treasuries or cash, even though ones like Tether in the past, there's been reports that, back when they were saying they were holding dollars to back it, they were actually holding Chinese paper and other things like that. That company has still not had a full independent audit. So you have an opaque black box that is now essentially buying treasuries, and there is a case where, if it does turn out there's some type of hole in the balance sheet there, and they do have to hit the bid in the treasury market, that they could significantly add to any type of chaos. Everybody should listen to Jim Rickards. Actually did a great podcast on this. You search for it like an Apple podcast, just talking about it's got the word Vietnam in the title, I remember. But
interesting too.
And hey, dude, I'm signing off, man. You got the patience of a saint. I don't have any brain cells left after that. I just killed them all. All right, see ya.
Thanks, Chris. But so Chris mentioned Art Laffer, and so I was listening to the Larry Kudlow show, which is where I did I had the $1 bet with Art Laffer on the financial crisis. But Kudlow, they had a segment when gold first hit 4,000, and they were all trying to figure out, why gold was at 4,000 when everything was so great, right? Everything was so great in America because Trump is president. It's the greatest economy ever, so why are people buying gold? And they came up with all kinds of, BS excuses to rationalize and not admit there was a problem. The same way that Kudlow's crew did in 2008, they didn't admit there was a problem because they thought everything was great because George Bush was president. And they can't criticize the economy when there's a Republican in the White House. But one of the things that Kudlow said was why he wasn't worried about gold going to 4,000 was because he wasn't seeing any problems in the bond market. He wasn't seeing any problems in the dollar. And that if there really was a loss of confidence in the U.S., that you would see it in those markets as well. And what I think Kudlow was missing, and I agree with him, that you will see a loss of confidence in those markets. It's just that it's being expressed in gold first. That gold soaring is an indication that confidence is being lost, and that you will see a collapse in the treasury market. You will see a collapse in the dollar relative to other foreign currencies. You just can't wait for that to acknowledge the warning sign, because by then it's too late. It's like when the subprime market blew up, I knew that was an indication that there would be a blow up in other aspects of the market, the regular mortgage market. I knew that the financials, that the banks, that Fannie and Freddie, I knew that there were a lot of other things that were going to blow up afterwards. But subprime was just the first link. And so gold is the first shoe to drop here. Now silver is the second. First it was gold, now it's silver. But you're going to see it. There's going to be a crisis in the bond market. U.S. Treasury bonds are going to collapse. The dollar is going to collapse. Gold is telling you that. The problem is most people are not heeding the warning. So who is that who tried to speak? Go ahead.
Oh, hi, Peter. Thanks for having me on. My question was actually directly related to what you were just saying. In the situation where the dollar does collapse and fiat currency collapses, how likely is a hyperinflation situation, and what are you doing outside of preparing with silver and gold? Are you preparing in other ways that aren't monetary?
Well, I mean, my main preparation is I own a lot of these inflation hedge assets. And I not only just own a lot of physical gold and silver, and in proportion to my net worth, I don't have that much in physical gold and silver. I mean, compared to the average person, yeah, I got a bunch. And I got plenty as far as to use for barter. But most of my money that I control or have, is in assets, physical assets like gold and silver mining companies, like, industrial metal companies, energy companies, electrical companies, consumer companies that make consumer goods. I have pharmaceutical investments. I mean, just companies that make, tobacco and alcohol and just regular food and beverages all around the world. I have money in emerging markets. Now I've got some money in real estate. I own real things. What I don't have any money in, I have no money in U.S. bonds. I don't own any government bonds. I don't own any municipal bonds. I don't own any corporate bonds. Nothing. Right? I don't have any bonds. So as far as like a 60-40 portfolio, my 40% bonds is 0% bonds. Right? I don't have bonds. I think it's just a losing deal. But I also have very little in U.S. stocks. I have some U.S. stocks. I don't have no U.S. stocks, but I have some. But the vast majority of my stock portfolio is outside the U.S. As a hedge against the calamity that I see coming as the dollar falls apart, as the U.S. loses its reserve currency status. I understand what that means because our whole economy is riding on that. That's why I said Trump was playing with fire with what he was doing. Right? He wasn't just biting the hand that feeds you. He was biting off the hand that feeds us, and just not really appreciating where we are. And again, I did this debate, with this guy at Zero Hedge a couple of days ago, about the trade deficits and all that. And yeah, I mean, I know these deficits are a problem, but they're really the result of a problem that goes much deeper than the deficits themselves. It is what's causing them. I've been critical of the conditions that have led to these trade deficits for 20 years, right? I wrote about it extensively in my first book, Crash Proof, that I wrote in 2006, 2007, or 2006. I wrote it in 2005 and 6. It came out in 2007. But I was very critical of the policies that were producing these trade deficits. And what we need to do is address the root cause of the deficits. We can't just put tariffs on and think that's going to solve the problem. It's actually going to make the problem worse. That's what I was trying to explain. That tariffs are like putting a Band-Aid on skin cancer. Just because you can't see it doesn't mean it's not getting worse. We need to go to the cause of the cancer, and that's the government and the monetary and the fiscal policy and the regulatory policy that, by and large, are being left alone. We're not getting to that. We're just trying to throw tariffs on and blame our trading partners for our own problems that have resulted in these deficits that we rely on like a crutch. And Donald Trump is like, well, we don't need that crutch anymore. Fine, well, then we can't walk, right? We're going to topple over. And that's what's happening. And that's what I want people on the spaces to understand. Because, if you miss this, there's no resetting the clock here. If you're holding a bunch of dollars or cryptocurrency when the music stops, you're out of the game. So you got to understand what is happening and do something about it, right? The fact that you still have the opportunity to buy gold and silver, $4,100 is going to look cheap for gold. $52.30 is going to look cheap for silver. So just buy it now. Don't be mad that you didn't buy it when it was cheaper, right? Just be mad that you're going to be even more mad if you don't buy it now when you look back at it in the future. And you can get it on these stocks. So you can go to my company, Shift Gold, and buy some gold and silver at Shift Gold. And you can buy some of these mining stocks. I love my fund, my mutual fund, Euro Pacific Gold Fund, EPGIX is the no-load symbol. And the reason, if you're looking at the track record year to date, the reason that my fund hasn't done as well as like GDX or GDXJ is we've got about a third of the fund in really small exploration companies that haven't really moved very much. But I believe that those stocks are going to be the rock stars of the next leg of this bull in these mining stocks. And good luck buying those stocks. I mean, try to buy them now. There's not a lot of liquidity. It took us years to build up this portfolio. So I think we're going to crush it in the long run because we have these small stocks. We have all the big stocks that have done really, really well. We just also have these small stocks that haven't done well yet. And I'm not talking about the type of stocks in the GDXJ, right? Because those are still big companies in the GDXJ. They're just not as big as most of the ones in the GDX, although there's a lot of stocks that are in both. But I'm talking about true juniors, exploration companies, small companies. These companies, I believe, are either going to get bought out in the next few years at many, many multiples of their current price, or they're just going to skyrocket on their own. But it's hard to know which ones to buy. That's why it's better to leave it up to us. Leave it up to Adrian Day, who's managing my gold fund, and just let him pick these stocks for you. Don't try to do it yourself. So my fund is Your Pacific Gold Fund, EPGIS. That's the no-load symbol. You can buy it at any discount broker. Go ahead.
The problem for us in England is we can't get your ETFs here.
Yeah, you can't get my mutual fund. We're going to be launching next year probably an ETF share class of my fund. You'll be able to buy them anywhere in the world. But in the meantime, what you can do from a lot of countries is open up an account with us where we'll create an individual portfolio for you, a separately managed account, and we'll pick all those stocks and put it in there. So a lot of people outside the U.S. can still do that. But if you can, if you're in one of the countries we can't work with, then you just got to, buy the stocks yourselves until my ETFs are available.
Yeah, that's what I did. And thanks to you, I got following Adrian Day and Don Durrett and Andrew Sheckman. And honestly, man, you've changed my life. It's already being very noticeable in the portfolio. I just had one other question. How likely is it that you can see like a US government gold revaluation? And can you see that there could possibly be like a gold-backed treasury launch next year to coincide with the 250th anniversary of the States?
Well, first of all, a lot of the talk about a revaluation of gold is all a bunch of bullshit. Because the idea is that by revaluing our gold, we somehow have a windfall that we could use, like it's some kind of get-out-of-jail-free card, like we're going to have all this extra money. Look, it's just an accounting fiction. It doesn't matter. Everybody knows that the gold isn't worth $42 an ounce. It's worth $4,100 an ounce. So even if we officially acknowledge that it's worth what everybody knows it's worth, nothing has changed. It doesn't give the government any new money that it didn't have before. We have the same amount of gold. Now, people are like, well, if all of a sudden we have an extra $1 trillion, right? Can't we spend it? Well, only if we sell our gold. But that would be the dumbest thing we could do. All the other central banks are buying gold. Why the hell would we want to get rid of our gold now when the world is moving back to a gold standard? The other thing they think that we could do is, well, we could use it as collateral to print more money. Well, what good is that? That just means more inflation. If we just use the revalued gold to print more money, it's just another inflation tax. So there is no benefit to the revaluation of the gold, right? There's nothing that we can now tap into. There are some people in the Bitcoin community that think, well, let's revalue our gold and let's use that money to buy Bitcoin, right? That's like the Cynthia Lummis plan, is to revalue the gold and then buy Bitcoin. That'd be about the worst thing we could do. If we're going to create a bunch of inflation, why create inflation to buy Bitcoin? Then we have nothing to show for it. I know why the people who own Bitcoin would want the U.S. government to do something that stupid, but because they could sell their Bitcoin and cash out and make a lot of money. But the rest of the country would be left holding the bag. I think that the U.S. does need to go back to a gold standard. But the politicians don't want to, because then they give up their power. The reason that we left the gold standard isn't because gold standard didn't work. It was because it worked so well. It worked so well that it prevented the government from growing and expanding and running big deficits and printing too much money. But so we went off the gold standard so we could keep acting reckless and irresponsible. Had we stayed on it, we would have been forced to act responsibly. So eventually, though, the governments are going to have to do it because the markets are going to force it. Anybody else wants to chime in? Raise your hand, and I'll enable you. There's another guy that's there that could speak. Sweet somebody, little baby picture. He's still got. But if anybody else wants to, if they raise their hand, otherwise I'll just start enabling people. There's Greg. And who else? If somebody raises their hand, then I'll know for sure. Oh, here's the guy raising his hand. All right, so I'm adding Camper. Pat, who's that? And there's another guy with his hand up. Rationale, I just put you up. Okay, after I'll enable you guys to speak, you have to unmute yourselves.
Thank you for telling me that.
Go ahead. Rationale.
EPGFX investor from 2019, your previous high. How about that? So I sat here and suffered, and with your words giving me the confidence to hang in there.
Which fund are you talking about?
I'm sorry, I said the gold fund.
Yeah, remember, the gold fund, though, pretty much every year we've had the gold fund, we've paid large distributions, including this year. There's probably going to be about a 15 or 20% distribution at the end of the year. So you can't just look at the price of the gold fund and say, well, we're just back to the price, because we pay out so much in dividends.
Yes, and we've accumulated shares. So let me tell you the story, so you can then ask you questions.
Yeah.
So I've been in there from the beginning. I suffered for 2-3 years, not a terribly long time, I guess, but I just want to thank you for giving me the confidence, because I was down 30% for most of that time, and now I'm up 75% from your previous high.
Yeah, well, it's not. I mean, it's not suffering. It's only like a mental suffering, because you're like, oh, look, I'm down, right? But I always told my clients that, look, if you don't sell, it doesn't really matter. If you don't need if you need the money.
Okay, we're listening to Peter Schiff. This is 4100 Announce.
I lost it. Hello? Hello?
Myself in gold stocks today than I would have had they just gone way up 5 years ago, because I added to my positions quite a bit on the last big significant pullbacks. The most recent one I really added was at the end of last year on the big sell-off after Trump won. I was like, whoa, this was an opportunity I never expected to get. There was a big sell-off in some of these stocks, and I took advantage of that, and so did some of my clients. Unfortunately, I had other clients who got scared and sold. I can't, be responsible for that, because I did whatever I could to discourage people from doing that. But
so can I ask you a question now going forward? So my moniker is Rational Man, which means I use reason and evidence, which is why I listen to you, because everything you say is proven true eventually. But when you think of a gold miner, a gold mining company, it seems like a terminal business. I mean, eventually they find all the gold they can, and they're kind of done. And if you're going to keep these things like forever, like a Warren Buffett idea, you do have to sell them at one point. Is that correct, or am I off base with that?
Well, you're not completely off base. So what happens is, gold companies, right? They earn a bunch of money, and they pay out some dividends, but they don't pay out 100% of their earnings in dividends. And then what they do with the money that they don't pay out is they invest in exploration and development so that they can replace the reserves that they mine. So if you're in the business of mining gold, you're going to try to find more deposits that you can mine. That's your business, right? You're going out there and trying to increase your reserves.
So
now, a lot of companies end up doing that by buying out other companies. So let's say I'm a gold company and I've got plenty of cash because I'm producing gold and I'm making a ton of money right now because I'm pulling gold out of the ground at $1,500 and I'm selling it for $4,100. I take that money and I go and I buy a small company that doesn't have a lot of cash, but they have a big deposit that they've discovered, that they I go and I buy that, and now I add that to my reserves, and now I can develop that mine. So these are businesses, right? I think it's a good business to be in because I think the world is going to need a lot of gold because they're not going to need dollars anymore. Gold is going to be the reserve.
Sore
but
nose?
gold is
Here's
also
Puff.
needed in
They have
industry.
50% more lotion to soothe sensitive
jewelry.
noses.
The world still needs gold. And there's not going to be a lot of gold. So So if you're in the business of exploring for and mining gold,
well past your warrants, which I'm waiting for that explosion. You think you can keep it going beyond that, maybe some more, but then at some point you take some off the table. It's like I don't even know what to invest in 5 years because
I mean, look, obviously at some point we're going to pare back our gold stocks and we're going to put the chips, move them someplace else. I still think that we're early in the move. I mean, and the fact that so many people, like the mainstream media, they talk about, this is a mania. This is, I know it's not a mania. I'm in the gold business, right? I have a company, Shift Gold. I can tell you that sales are mediocre. They have not. My best year at Shift Gold was 2020, because during the COVID, when everybody was really worried, there was a lot of buying of gold and silver during COVID. So we're not even close to 2020. I mean, our sales are maybe a quarter of what they were back then.
But this is while Kitco is putting out article after article. Well, not article after article, but a lot of information saying, the retail investors in, the gold, the ETF is, getting inflows. This is it. This is all the retail investors. No way, right?
No. Look, all last year there were outflows. All last year, and for most of this year there were outflows, and especially out of the gold, the GDX and GDXJ. Most of the money, I would say that most of the money that came into the Bitcoin ETF came out of gold ETFs and gold stock ETFs. That's where I think most of the money came from that went into Bitcoin in the investor world. So no, the retail investor is not in. He's not even close. I think the institutions have just started to move some of their bigger players into gold. But no, I don't know when retail is going to join this party. And believe me, I'm happy for that to happen, because we'll sell a lot more gold at Shift Gold. But I'm happy for it not to happen, because that means that my customers don't have to compete with everybody. I can still get my followers in at better prices when they're not competing with all their neighbors to buy this scarce resource. But this is still early. I mean, people in crypto think they're early. I hear this all the time. Oh, this is still early days of Bitcoin. Bitcoin went from nothing to 126,000. People, look at all these crypto billionaires, right? It is not early when you have billionaires in crypto, right? This is the waning days, right? This is when all the people that got in early, for years they've been cashing out.
Well, I've been listening to you. I've been listening to you since 2010. I've probably put 10,000 hours into your podcast. And the sad thing is, I try to talk to friends and family, and I try to tell them about this. And you know what my success rate is? Maybe 1 in 500 listen to me.
Yeah, well, when gold is 10,000, or they might start listening to you. Oh,
it's too late. Well, maybe not.
But it may not be too late. Look, gold, it's a moving target. Like when I was talking about $5,000 gold when it was at 1,000, right? And we never quite got there. Now we're almost there now, but so much has happened since then that I don't talk about $5,000. 5,000 is nothing. That's just around the corner. Then I'm looking at $20,000 gold or higher, because it all depends on how many dollars we've created. Gold is just telling you what the dollars were. So many dollars over the last decade, and we're going to print so many more. We're going to print more dollars in the next decade than we did in the last. And so gold, this whole thing started. Gold was at $20 an ounce when we started the Federal Reserve. And in the 120 years before we had a Federal Reserve, gold stayed $20 an ounce. So it was this process of fiat currency that we've gradually debased over time. Gold hasn't changed. It's the same ounce of gold. What's changed is how many dollars you need to buy it. You used to be able to buy an ounce of gold for $20. Now you need $4,000. Well, one day you'll need 20,000. One day you'll need 50,000. Just depends on how many days it's going to take.
You know, I have a tech background, and I do know that Bitcoin is nothing, just like you say. And I just want to say to you, thank you. And I want to tell you that one day you will be a real billionaire with a liquid asset you can actually sell. Thank you, Peter.
Get there. It's going to take me longer than I thought. I'm 62 and I'm still not there.
Keep healthy. It's going to happen, and I want you to live at least another 30 years, please.
I'm trying my best to live long enough so that it's not just my kids that spend my money.
Thank you so much, Peter. Bye.
But yeah, and I'll probably end up giving a lot of it back. Once I get to the gold or my own stocks. But yeah, I mean, I think my business is going to be worth a lot more, and my reputation will have been vindicated beyond my following. I mean, obviously, the people who have followed me closely over the years, they know that I've been right. But a lot of people don't appreciate how much I've gotten right. Because all they know is they hear, oh, Peter was against Bitcoin, and they say Bitcoin's way up there. And they just, you see, he got Bitcoin wrong. Or, they say, oh, he's been bearish on the stock market. Where, I haven't been bearish on the stock market. I've said the stock market is overvalued, which has been true. But I've said that, we're printing so much money that the price can keep going up. In fact, when I put up that video from, 10 years ago on CNBC when they used to have me on, and they were making fun of me because I said, $5,000 gold, and it was at 1,200. They said, Peter, you're bearish on the stock market. I said, well, no, I'm not. I think it's going to go up. I just think it's going to go up less than gold, because I think it's inflation that's going to drive it up, not real fundamentals. And that's what happened. Anyway, I see Grant Cardone is in the house, so I made you a speaker too. You can chime in when you want.
Peter, I just want to know how I can get rich.
Huh?
I just want to know how to get rich. I want to know.
You're already rich.
Really, really rich. What would I do? What would you tell me? What advice would you give me?
To get richer than you are right now?
Yeah.
Well, do you have any gold mining stocks?
I don't.
You should buy some. I think you I know you own some Bitcoin, so you probably made some money there.
Yeah, I own a bunch of real estate. 14,000 units.
Yeah, what part of the country are your units mainly?
They're all in Florida, mostly Florida, Texas.
Yeah, so those are probably better states, maybe landlord-friendly states that you can own property. I think the main problem, that real estate's going to have is not only that credit's going to get really tight and rates are going to go up, but I think that a lot of landlords are going to struggle to collect their rent. That's going to be part of the problem, because I think that the cost of living is going to go up a lot, and people are going to struggle to pay their rent because everything else is going to be so expensive. And they got to eat, they got to keep the lights on, they got to keep the utilities running, they got to pay their taxes. So people might be behind in their rent, and I also think a lot of people may start renting out rooms, so they're taking in boarders, and kids will move in with their parents will move in with their kids, so households can be destroyed. So that could be a headwind for the U.S. real estate market. But I still think if you have a lot of debt on your property that you can manage, the debt gets inflated away. Inflation is good for debt, right? Because it wipes out the debt. So that kind of leverage could help you. But I would just, instead of pairing Bitcoin, real estate with Bitcoin, I think you should have gold as a hedge to your real estate and these gold mining stocks. I think that would be a much better way to go.
So, okay, let's go back to the rent. People are not going to be able to pay their rent. Now, if we print more money, why would they not be able to pay their rent?
Well, if they get that money, yeah, right. We print enough money, they're going to pay the rent.
Yeah.
And if you're talking about hyperinflation, the rent's not going to buy you very much. So there's your other problem, right? You're getting a lot of rent, but at the end of the day, what if the cost of maintaining the properties exceeds the rent, right? Because prices just are skyrocketing. But yes, your debt gets wiped out, so that's a positive, right? If you have leverage,
Poetry for you.
Live somewhere. They
Like
can't
this
live in
video,
gold and they can't live in
subscribe to
gold.
right? But you can use your gold to pay your rent. So you can.
Yeah, but that's never. I mean, I've been in the rental business for 30 years. I've never had somebody offer me gold.
Well, I mean, but they can sell their gold to pay the rent, right? I mean, it's or at some point, I'm sure you would take gold. I'm sure if one of your tenants.
I mean, look, if they can't pay in fiat, I'll take anything. I'll take
what?
rental
I
business
think
for
at
30
some
years. I've
point
never.
you might find that landlords not only want to get paid in gold, they may actually denominate their leases in gold. They may rent out the property. So, look, I'll rent you this property, but here's how much I want you to pay me every month in gold.
Yeah, Peter, there's nobody taking gold for rent.
No, okay, well, if we get into a hyperinflation scenario, let's say we get into a scenario where prices are doubling every month, right? Are you going to rent out an apartment for, let's say, $2,000 a month? You know, when the $2,000 at the end of the lease, you know, could be worth a tenth of what it was when the lease began? So, you follow me?
Yeah, no, I hear you. But
Yeah, so once we really get into a higher inflation environment, then people have to come up with ways.
what do you call hyperinflation? What's hyperinflation?
Well, you know, there's no specific definition of like how much, right? Because even 50% a month, I don't know if that's hyperinflation. That's damn high, right? Prices double every 2 months.
That would definitely be hyperinflation.
Yeah, I mean, what about 10% a month, where prices?
10% a month would be hyperinflation.
Yeah, I don't know that's not really hyperinflation.
That's 120% a year.
Yeah.
That's never happened in my lifetime.
Well, not in America. It's happened in your lifetime in other countries.
Yeah,
it just
right.
hasn't happened in America. But it could happen in America. Maybe it will happen in America. And in an environment like that, landlords have to get creative. They just can't rent out a property, you know, in a fixed dollar rent, because the dollar's not really fixed. And your expenses aren't. I mean, if you own a piece of property, you know, your maintenance costs aren't fixed.
Yeah.
Right? And so...
But my top line would be growing faster than my expenses.
Not necessarily, and not if your rents were fixed in dollars and your expenses weren't, your insurance wasn't, your taxes weren't. What might be fixed is your debt. If you can lock in long-term financing and you can fix the cost of your debt, that's what you want to do. Just that a lot of commercial loans are not like, you know, residential, you get a 30-year mortgage. A lot of the commercial loans, you know, maybe are 5 years, and then you have to refinance it. And, you know, who knows, you know, what type of financing will be available when a lot of these commercial loans come due.
Yeah, but I mean, if you're saying that, like, okay, nobody's buying homes now, nobody's buying cars.
Well, I don't know if no one's buying them now, but yeah, I mean,
No, but if interest rates are skyrocketing,
oh yeah, eventually,
there's no residential activity now. There's no volume at all
right.
in the secondary housing.
Yes, that's because prices are still too high. Real estate prices.
Well, no, rates are too high because
No.
The moment the new home builders subsidize
There's no residential activity now. There's no
going homes.
Right.
Yes, of course, but the rates are actually too low. Rates need to be higher in the U.S. Well, our rates are too low. So the real problem is that real estate prices are too high.
I love these conversations with you, by the way, man. They're always good to have with you.
But that's the solution, is lower real estate prices. Now, people who own real estate don't like that solution because it takes away the value of their assets. So what they want is low interest rates. But the only way we can get low interest rates is by creating massive inflation. But then that just wipes out, you know, the lenders, and they don't want to lend even more than they did before. And so you end up with just the government. But we can't have a housing market where the government is supplying all the credit and doing it by creating inflation. I mean, you have hyperinflation. That's going to be are so painful that nobody wants to allow them. So the problems just get bigger and bigger, which means the solutions become more and more painful, which is why we end up with hyperinflation, which is more painful than any of the solutions.
Also, everyone overlooks that real estate was the best event from 1945 to perhaps 2000, but since 2000, it's been a dog.
Well, I mean, what made real estate a good investment was the debt, was the mortgages that you were able to take out.
The bulker interest rates, that's what made it a good investment.
Yeah. But, but a lot of real estate people forget, a lot of people buy something called a teardown. And a teardown is a house that used to have a lot of value, but now is worthless. So it's not like, houses don't go up in value. They depreciate because you use them. They wear out.
A lot of real estate people forget,
you have to spend a lot of money. I own this house in Connecticut. I spend so much money on that house every year. I mean, it's a massive money pit to maintain that house. Just the grounds, the gardening. I just had to redo the pool. Just to fix it. It's costing me more to fix the pool than it cost me to install
loss
it.
in my life has been my house, purchased in 2002.
The only real estate I've made money on is here in Puerto Rico, and that's because it's insane here. I don't know if Grant knows about what happened here, but maybe the real estate in my community has gone up like 7-8 fold since I bought. So that's kind of a crazy, situation having to do with supply and demand. Shows you that if you own the right real estate, it can go way up. But I haven't sold my real estate, so who the hell knows? I'm just living in it. I just know that I could sell it for a lot more than I paid.
And also concentrated wealth in places like New York City, and then all of a sudden the politics change, which looks very probable.
Ironically, too, a lot of the reason that the real estate is so expensive in my community is because a lot of crypto people live here and they bid it up with their crypto profits.
Probably a good move for
real estate now. They own something real with the crypto they sold. Oh yeah. It's a great trade. That's why they didn't give a damn. They were coming over here and paying $40 million for a house that the guy who they bought it from, paid, $5 million. But, what do they care? It was funny money, right? They made it for nothing.
I sent you an email about a solution to all economic problems in about 2 seconds. That'll never happen, but maybe somebody read it, maybe they didn't, but it's too long to talk about here. See if you can find it. It's called the 2% solution. 2% tax on transactions, right? $550 trillion a year in the U.S. That would create enough tax revenue.
Somebody read it, maybe they didn't. Came up with some tax system with Grok. Forget that's all.
Yeah, I did it with ChatGPT. That's funny.
Yeah, I use Grok.
But it ends up being a pure libertarian system, though, and it works, and it's very quick.
Yeah, look, I mean, the worst way to collect taxes is the way we do it, with income taxes and payroll taxes. It's the most economically destructive way for the government to raise revenue. The best way to raise revenue is through a consumption-based tax. That's the easiest to collect. It does the least harm to the economy. It doesn't create an army of lawyers and accountants that just suck off the economy.
They'll never give us their power. That's the problem in the conversion to the system. Because if they did, it would actually be good for everybody, including them. But they won't do it.
Yeah, because they want to. They like to be able to give out special tax breaks to people who bribe them. Basically, what it boils down to.
Because with Grok, I asked questions and ended up with a pure libertarian system, minarchist government, only funding the military, no entitlements, no nothing. I did include for the Democrats a $50,000 payment to everyone making less than $100,000, and all of that was financed with a 2% tax on transactions, the whole thing, plus paying down the debt. Wow.
Well, if you have to get rid of the entitlements, obviously, when you hear guys like when Trump or people in the administration talk about how once upon a time America, the government only had tariffs, and we didn't only have tariffs, we had some other excise taxes, but yeah, tariffs were a major source of revenue, but that was when the government was tiny. We had the government just did the national defense. And we didn't have Social Security, we didn't have Medicare, we didn't have Obamacare, we didn't have all these government agencies and departments and programs that we now have to pay for. And the problem is we don't even pay for most of them now. We borrow the money. That is the problem. We have so much government, we can't even afford to pay for it. So we've gone massively into debt, and we're printing all this money. This is how this whole house of cards is tumbling down. And this is what gold is telling you right now. We are approaching the end of this experiment, which didn't even need to be run because you pretty much know exactly how it's going to end. But gold is showing you right now that this thing is about to fall apart. But the people who have been living in this experiment world don't even realize it, right? Just like they didn't realize what it meant when the subprime market blew up in 2007. They didn't realize that there was a financial crisis around the corner. They have no idea. They don't realize that we're living in a bubble. They don't realize the phony nature of our economy. And so they don't get it. To them, it's a bunch of noise, right? Who cares what the price is? In fact, when I went on CNBC in 2004, I remember with Mark Haynes, who's not around anymore, and I posted this a few times on the internet. But I said, Mark, last time I was in your studio, gold was 400. Now it's like 450. It's gone up $50. And Mark Haynes was like, who cares? Why should I care about the price of gold? What difference does it make? I care about the price of coffee, care about the price of, a corn or the price of milk. I don't give a damn about the price of gold. And he's the anchor on a financial station and doesn't even care about the price of gold, which is one of the most important prices in economics. The gold price means a lot.
This is Peter Schiff talking about gold. Gold has reached a new high today on October 13, 2025, 4,100 an ounce.
And it's going to create a very dangerous environment for a lot of people for a long time. And maybe moving to Puerto Rico is not just smart in the tax sense, but a security sense. Because you may not be exposed to some of the dangers of starving masses and things like that. That's frightening.
Yeah, overall, I've done pretty well with the Puerto Rico move. The main problem was moving my bank here. That was a disaster. I lost not only tens of millions, it may even be hundreds of millions.
Yeah, and your case seems so obvious. You can't get somebody to jump on that, really?
No, I know. I mean, all because all the criminals, some of the criminals are still working at the government.
The government's closed. They sent home half the IRS. Obviously, we don't need them.
As I said, the only problem with the government shutdown is they don't shut down enough, and then they always reopen it. Anyway, well, thanks a lot for the call.
Thank you.
Anybody else wants to say something, raise your hand. We got a lot of people who have requested to talk, but it's better if you raise your hand. That way I know that you'll know that you really want to speak, and I will enable you. Okay, there's a couple of speakers. You guys are up. I put two hand raisers. Yeah, is that Ration? Is that Camper? Campfire. See, it cuts off. You can never read the whole name. It just cuts it off.
I see that. I'm sorry to hear that.
This is Peter Schiff. It's October 13, 2025. Gold has reached 4,100 an ounce. Silver is past $52 an ounce.
Like 2x your video. So here's what I did. You tell me if I'm a genius, if I'm an idiot, or somewhere in between. I've been stacking silver for about 15 years, give or take, and I thought, you know what? This is stupid. I don't have any extra money because I just kind of keep continually buying metals, one or the other, and I have a family of 5 or 7 of us in my family, 5 kids. And so I said, you know what, I'm going to do it. So about 3 months ago, I sold off about 1,000 ounces of silver at an average price of about $37, $38 an ounce, right when silver was about at 40. And I invested all of it into mining stocks. Now, since then, and I can sit and do the conversion rates and the maths in my head on what I'm going to have to pay on the capital gains taxes, depending on when I decide to pull money off the table, and then take the number of ounces I sold and say, here's how much I would have made on my 1,000 ounces. And I'm sitting about 40% up right now on that account. Now, it does drive me a little nuts because I sit and watch the government, the corporatism stocks, go up 70% today.
We've been relying like a crutch on Donald Trump claims. How inflation is getting
metals, not MP materials. It was critical.
Oh, is that
critical metals?
Oh, is is that what? Yeah, maybe the Trump administration took a stake in it, or they gave it a.
Yeah.
Yeah, you got to get the insider information. You got to
Well, what do you think about the path I took there?
Okay, this is the Peter Schiff podcast. It's October 13th, 2025. Gold has reached 4,100 an ounce. Hit that like button, subscribe.
Pays dividends. When you get your dividends, you can buy back some more physical silver with your dividends to start, recapturing your physical.
This is the Peter Schiff podcast.
If it doesn't pay dividends yet, wait. I mean, a lot of these stocks are going to be paying big cash dividends, and then you could use that to buy. But when I first started buying silver for my clients at my brokerage firm, it was under $5, right? Silver right now is $52.50. It's up again aftermarket, so it's up more than 10 times where it was when I started recommending it. And the same thing for gold. I was buying gold at $300 an ounce.
Okay, this is the Peter Schiff podcast.
It's over 4,000. It's up more than 10-fold. And I took so much shit in the financial media for recommending gold and silver. Like, it was like sacrilegious. Like, I was like blasphemy. Like, how dare you tell people to waste their money on these rocks? It's like, But the most ridiculous thing is the same people that gave me shit on television for recommending gold and silver allow people to come on and recommend Bitcoin, and they don't say anything negative. They just, oh yeah, great, yeah, and they come out there and say, yeah, Bitcoin's going to 1 million, Bitcoin's going to 5 million, and they just, there's no pushback, no criticism. But when I was talking about gold and saying gold can go to 5,000, oh, that's crazy talk. That's not going to happen. You're just saying that because you're trying to scare people.
It's October 13th, 2025. This is the Peter Schiff podcast. Gold is broke 4,100 an ounce.
I don't really plan on moving too much money around within. I mean, I don't want to pay the capital
This is
gains
Canada
tax.
John. Hit the
I'm
like
looking for
button.
a year-long.
That's why I moved to Puerto Rico. My capital gains tax is zero. So
Yeah, that's great. That's wonderful.
you can move here. There's nothing stopping you.
Except my 5 kids. That's a whole other story. But
The kids like it better. My kids have
that's true.
a life that I wish I had when I was their age. Forget about the money. Just the lifestyle, the community that they have. The kids have more fun. Well, the adults have a lot of fun living here too. It's like a Disneyland for adults. So everybody's having a good time. And on top of that, they don't have to pay capital gains tax.
If Trump starts investing in some of my companies, I'm not going to do that.
Well, there it is. Kansas is paid off.
So my long-term goal is to basically get back every one of my ounces, like you just said, and then hopefully the miners will outperform, the physical metals, even with my taxes. So tell me where I fall in the idiot to genius scale.
Trying to scare people.
Well,
I don't know that you're certainly not an idiot. I don't know about genius, but I think it's a smart move because I was telling people to sell some of their physical to buy the mining stocks because I thought they were so super cheap. And if that's all you had, I mean, obviously, like if somebody had $100,000 in physical metal and $100,000 in T-bills, cash in some T-bills and buy some mining stocks. But if somebody was all in on physical gold, they had $100,000 in physical gold, they didn't have anything else. Well, all right, well, sell some of your gold and buy the mining stocks. Because I thought everybody should own them.
Okay, gold has reached 4,100 an ounce. We're listening to Peter Schiff. It's October 13th, 2025. This is Canada John. Hit the like button.
People before they doubled and tripled that they were going to 10x, and I don't think they're going to do that.
Well, wonderful to talk to you. I'll let somebody else speak. Thank you so much for your time. I really appreciate it, Peter.
All right, anybody? I got a few people that can talk. You just got to unmute.
Yeah, hello, Peter. This is Mike French here from England. Can you speak?
Yeah, hey, Mike. How are you?
I'm great. Lovely to
So
see
you're up
you.
late there in the UK.
Well, it's 11:10 at night. It's not too bad. And to speak to you is fantastic. It's a real honour. I would like to thank you from all the people over here in England that do follow you.
Okay, gold has reached 4,100 an ounce. We're listening to Peter.
And specifically gold and silver. My question to you is: I've been listening to you for the last 5 or 6 years. I invested in gold, silver, stacking as much as I could. That was the only time I was able to do it. And I also bought plenty of mining stocks. I sat through a period of time for a couple of years, still listening to your podcast every week, where the mining stocks went down. My question to you is, yes, the mining stocks have gone up the last 18 months or so. However, they haven't gone up really as much as maybe you and other people suggested. I follow E.P. Tucker as well. He was saying gold royalty companies and good mining stocks will go up 5 to 10x. When do you think they will be going up 5 to 10x?
I think they're in the process of doing that now. Before you can go up 10x, you got to go up 2x, right? So it's all happening. But I have some stocks that were up really big today. Look, some of my biggest winners, Metalla, we have that on our fund. It was up over 10% today. That's royalty. That's in not only gold, but in copper. My silver stocks, I own Endeavor Silver. That was up 11% today. That was a big mover. Pan American is one of my biggest holdings. That was up 6% today.
Candidate Congressman John, we're listening to Peter Schiff. Gold has reached 4,100 an ounce. It's October 13, 2025. We're listening to Peter Schiff. Hit the like button.
But a lot of these big companies, some of the big royalty companies have been lagging recently, like Franco-Nevada.
Candidate Congressman.
Not weak. It just hasn't been going up that much. It was up 3.5%. Or Cisco was up, just under 3%. Even Wheaton Precious Metals, which is my biggest silver stock, was only up 3% today. Didn't even make a new 52-week high. So it's been underperforming. But I made a killing in that stock because I've owned it for 20 years, and my cost basis is tiny. In fact, I was on Fox Business today with Liz Clayman talking about Agnico Eagle, which was up 4.7% today at $172. I have stock in my own account that I bought for under $10.
Candidate Congressman.
I remember the first time I bought it was under $10, and I still own those shares. I've never sold them, and now it's up 17x. But I still think I think it's going a lot higher from here. I wouldn't even consider selling it, even though I have zero capital gains tax. I could sell it pretty much and pay no taxes. But I think that we have so much room to go. In fact, even if you look at the GDXJ at 105, it was at 160 in 2011. 160. Gold didn't get any higher than 1900 back then. And I think, there was a lot more enthusiasm for these stocks back then. Investors were burned so many times in the mining stocks that they're afraid to touch them. So it's going to take, I think, even more spectacular gains for the average investor to look at these stocks. But they're going to, because people invest in the rearview mirror. That's ultimately what moves people. They look and see what happened in the past. That's what got a lot of people into Bitcoin. They saw how much it already went up before they bought it. And then they started to buy it would keep going up. Well, people are going to look at how much these stocks have gone up over the last 3 to 5 years, and they're going to want a piece of it. And they're going to start
Candidate
buying.
John, we're listening to Peter Schiff. Gold is at 4,100 an ounce. It's October 13, 2025. We're listening to Peter Schiff on his
That's one
podcast.
I'm mostly heavily invested in. But I've also got other ETFs, Van Neck Gold Miners, etc.
Candidate John, we're listening to
And a lot of the I Am Gold, we own, I own a lot of that. We own it. That was up 7%. Gold Fields today, a new 52-week high, up 6.5% on the day. Alamos Gold, I think, I don't know if it made a new high. No, not a new high, but up 5% on the day. What about Kinross? That might have made a new high. Let's see. No, up 5%, but not even a new 52-week high. But look at the lows. Kinross is at 25.5. The 52-week low is 8.99. Right? I Am Gold. The 52-week low is 4.64. It's at 13.5. But the silver stocks, the Star, Coeur d'Alene closed at 21. You could have bought it within the last 52 weeks at $4.50.
Well,
So this is just intra-year. But you can look at Coeur d'Alene and say, okay, yeah, it's up fourfold this year. But in 2006, it was like a $50 stock. So it still needs to double, and it won't even be back to where it was in 2006. So, these stocks are not expensive, even though they've gone up.
Yeah, I hear you completely. One other really quick question, if I may, Peter. I don't want to hog the air. With regards to the dollar is starting to crash. So is the English pound over here. What's your thinking around a gold-backed currency, and if it's even possible that would happen, and do you see it happening?
Well, it's not only possible; it's probable. It will happen. I mean, currency used to be backed by gold. That's what made it legitimate currency. So you can either have a fiat currency or you can have a legitimate currency. A fiat currency is backed by nothing, and a legitimate currency is backed by gold. And so all that it takes to go from a fiat currency to a real currency is to back it by gold. America, the U.S. dollar used to be backed by gold. In fact, the dollar was defined as a weight of gold. The dollar was actually gold. And we issued currency that was backed by dollars, right? But what we ended up doing is just redefining the dollar really as just a piece of paper, even though legally it's still a weight of gold or silver. But I think the world is going to go back. I mean, why was the pound sterling, right? I mean,
Gold's at 4,100 an ounce. Peter Schiff is talking about U.S. dollar backed by gold. It's October 13th, 2025. Hit the like button, share button.
Is a new idea that fails, just like that Bitcoin can be money.
Gold's at 40.
But yeah, no, I'm 100% certain that the world will be back on a gold standard.
I'm sorry, guys. Andy Shankman has said that the COMEX, or he's been following him, the COMEX has been filling, and they don't know where, and a lot of it's in the U.S.
Filling what? What do you mean?
He said the COMEX contracts are being called, the physical gold's being delivered, and tons of it's in the U.S.
Do you think
they don't know who's taking it. Could it be the U.S. government? Are they going to
Gold's at 40.
I doubt it's the U.S. government buying it, but there certainly could be some large holders that want to take physical delivery of gold.
According to Andy, it's massive. It's massive. He's never seen it before in his career of 35 years or whatever. I mean, geez.
But we still don't see, like, at my gold company, at Schiff Gold, like, we still don't see big premiums in the physical market yet. I mean, it's not like we did during COVID. During COVID, like, the premiums really spiked. There was so the demand, I think, is more for the big bars. It's not the little guy buying coins. It's still the big guy.
Right, that's retail. So we're talking about a government probably buying this. I mean, who's taking the physical bar?
Well, it doesn't have to be the government. I mean, it could be. There's a lot of wealth in this country. There's a lot of people that have hundreds of millions or billions of dollars.
Maybe Elon Musk is buying it.
Maybe. I mean, he's a smart guy. I mean, anybody who's smart, who has a lot of money, is moving that money into gold. Because there's only so much art you can collect. There's only so much real estate. So when you have guys with significant quantities of money, you see, if we have hyperinflation, and, if you have billions of dollars, it's wiped out, right? It could be worthless. And so if you have billions of dollars now that may be worthless in a few years, you got to do something with it. You want to convert it into something to maintain the value of what you got now. Gold is one of the best ways to do that. I mean, because if you're a billionaire in Zimbabwe, you don't have any more money than somebody who's a hundredaire. Because it doesn't matter if you have $1 billion Zimbabwe dollars, right? Well, if a pack of chewing gum is $10 billion, what's the difference? A couple of sticks of gum.
However, the U.S., according to the gold clock, still has the most gold, if that's right. I don't know if that's
right. Well, of course, Fort Knox hasn't been audited in I don't know how many years, 70, 80 years, when the last time we audited Fort Knox. So who the hell knows what's there? Trump, they made a lot of noise about auditing Fort Knox. You'll notice that it hasn't actually happened.
Just like Doge.
So I think the reason they don't want to audit it is because they're afraid of the results, that it's not all there. That would be a big problem. But even if it is all there, we don't have enough at the current gold price to back our notes. So if we were to go back on a gold standard, it's not with $4,000 gold. It may be with $40,000 gold, but we ain't doing it with $4,000 gold. But they can devalue the dollar to whatever they want in terms of gold to try to make it work.
Well, we're happy today. We're happy being right, but the future for regular people is not going to be good.
Well, it's not necessarily going to be good for people who own gold either. I mean, the thing is, if there's rioting in the streets, I don't, if the dollar crashes or when the dollar crashes, there could be price controls, there could be rationing and black markets and, martial law. A lot of bad shit's going to happen, when the rug gets pulled out from under us in the United States. So, it's not an outcome that I've wanted to happen. It's, everything that I say publicly, everything that I advocate, right, to prevent this from happening, right, is what I want to happen. But I'm obviously investing not for what I want to happen, but for what I expect to happen. And is there a satisfaction that comes with being right? Yes, of course, right? I'd rather be right than wrong. But, and I know I'm not wrong, so it's not like, and the thing is that the longer that we postpone the crash that I know is coming, the worse it's going to be. That's why it's better to get it over with. But of course, it's going to be so bad that living through it is not necessarily, it's going to be difficult. It may even be difficult for me.
Can you see a condition where gold becomes so expensive it's hard to buy and or sell on liquidity?
Well, no, it's just that the dollar becomes so cheap. So it just becomes very expensive for Americans to buy. Doesn't mean it's that expensive for everybody else. And I think gold is going to go up in terms of all fiat currencies, but I think it's going to go up a lot more in the dollar than it's going to go up, in other fiat currencies.
I guess you could always get a job at Goldman Sachs because they're robbing your playbook now.
Well, look, there's some smart guys that work over there, so
Took a while.
Yeah, well, who knows? You never know what Goldman Sachs guys are doing with their own money, because what they tell customers to do with their money may be completely the opposite. I tell my customers to do exactly what I'm doing, right? I eat all my own cooking. I eat a bigger helping of it than anybody else. So if I'm telling you to do something, it's because I'm doing the same thing, right? I'm not like trading against my book. But Wall Street is famous for doing that. Like, you have all these big Wall Street companies with Bitcoin ETFs. Most of the guys that run these companies are not dumb enough to buy those ETFs with their own money, but they're happy to let customers do it with their money. And
well, I have to go now and eat my $40 piece of salmon that was $10 5 years ago. So, thank you, Peter. You're the best.
Right. Take care. And I could probably go for another maybe till 7. Then I got to eat my dinner.
Yeah. Peter, if I could just quickly say, I think it's almost time for you to take a bow with everything you've been saying over the last few years, with what's happened with the economy, politics around the world, and gold and silver prices and the action in the markets recently over the past 18 months. You can soon take your bow and say that you weren't initially right, but you were right in the end.
Yeah, I like to resist the temptation to say I told you so just yet and claim victory, because there's still things that I think are going to happen that haven't happened yet. So I'm not going to do a complete victory dance, and I don't want to celebrate, because I recognize that for a lot of people what's going to happen is going to be very painful, including even the people who are going to get wiped out in Bitcoin. I have a lot of friends, a lot of good friends that have a lot of money in Bitcoin, despite the fact that they're friendly with me. They haven't sold their Bitcoin. And, I can't really press them. It's their money. They do what they want with it. And I'm not happy that they're going to lose that money. But I also know that if they sell their Bitcoin, it just means somebody else is going to lose it, right? It's a hot potato. But there are some people that own Bitcoin that are just so goddamn arrogant. But I'm happy they're going to lose their money. They deserve to lose it, right? There's some people that deserve to lose money. And I just hope that those people, and most of them are young, and so that's fine. If you get wiped out in your 30s, You got plenty of time to earn your money back. What I don't like is when I find out that people my age have a lot of money in Bitcoin. That's dangerous because you're in your 60s, you're in your 70s, and you lose all your money. It's not that easy to earn it back.
No. Does your son still have the Bitcoin?
No, my older son, not really. I mean, he had to sell it for other reasons. I think he got out of most of it around 50,000. So but he didn't make that much because he never had that much in it. He bought it at around 10,000. But he just lost interest in it because he became fixated on AI. That became everything he was in on. I mean, I wish it would have been great if he bought a bunch of AI stocks, but he didn't do that. But he wanted me to though. He was trying to push me into them, but I don't think he really did much himself.
Okay.
He's only 23, so.
Yeah, he's still got a lot of time to learn, isn't he? Pleasure speaking to you, Pete. I'll let someone else speak now. Thank you.
All right, great. Who's up next? Anybody ready to talk? Let me see. You can raise your hand because I've got a few people that can unmute themselves. But if someone raises their hand, I'll just let you. There we go. Okay, that is end game, I guess. That's appropriate. Hello?
Hello?
Yeah.
I had a question about Newmont. Newmont is having their earnings later this month in October, and with the CEO stepping down, do you think that'll cause any jitters in the stock?
Well, no. So Newmont just got an upgrade. Somebody upgraded them today to a buy or something. And look, I think that this next round of earnings, you see what's happened with these gold stocks, a lot of them for years, even though the price of gold was going up, they were missing a lot of the earnings estimates because their costs kept going up. And so their costs would go up, and so they wouldn't make money, or, they had production delays or things would happen. But, I never was bothered. When a gold company came out, like when I bought my first shares of Agnico Eagle, when the stock, dropped below $10, the event was a rock slide. And the rock slide meant that they weren't going to make their earnings because they couldn't operate the mine until they cleared all the rocks. And so people were all upset that they were going to miss earnings for a couple of quarters. And in my mind, I was like, who gives a shit? Because as far as I'm concerned, the later they mine the gold, the better. Because I just thought it was going to be more expensive in the future than it was now. And if they had to delay their mining, it would be a good thing. So I just said, sure, let me buy it. But so I think there's been a lot of bad news coming out of a lot of the mining stocks. But I think the last several earnings reports have been good. Maybe they weren't as good as some people had hoped for, but they've been coming out with great earnings. But I think the earnings reports we're going to get for Q3, which are coming out, are going to be phenomenal. I just think that they're going to be a catalyst for a lot of re-ratings. A lot of companies, when a company comes out with really great earnings, before their stocks start to trade, all of a sudden Wall Street says, was when it gaps up on the news. But I think Wall Street's going to start, upgrading these stocks. The earnings are going to be great. And then what are the companies going to announce they're going to do with all this money that they're earning? Well, some companies may increase their dividends. Other companies may increase their share buybacks or initiate their share buybacks if they don't have them. So either way, if you're going to buy back stock or you're going to pay dividends, that increases the value of the stock. That's something that like Bitcoin can't do. Bitcoin can't pay a dividend and it can't do a buyback because it doesn't have any cash flow. But these gold mining companies generate a lot of money. Like you look at Newmont. So Newmont is trading at like 16 times earnings. But once they announce their new earnings, it may be at 12 times earnings or 10 times earnings. Because what they're probably actually earning is a lot more than what the street has forecast. And then a lot of it is their guidance. Like, okay, what did you earn this quarter? And let's say they earned a ton of money this quarter, and the average price that they got for their gold was $3,600. But when they announced their earnings, gold is $4,200. So as much as they earned in the third quarter, they're going to earn even more in the fourth quarter. because the gold is a lot more expensive, right? So this is a huge dynamic, and no other business has this kind of pricing power. I mean, you can't just increase your price the way a gold company can and not lose any sales, right? If you're selling a product and you jack up your price by 50%, some of your customers are not going to buy anymore. But if you're a gold company and you raise your price by 50%, you're not going to lose any customers. You're not going to lose any business. Your customers are going to keep on buying. They're just going to pay 50% more. In fact, gold is one of the rare things where the higher the price goes, the more people want to buy it. It's not like a normal commodity where if the price goes up, I want to buy less. No, I want to buy more.
Yeah, I know. I mean, I made a lot of money off Newmont this year. I'm a big shareholder. I've been selling puts, buying calls, and stuff like that. So I was just, curious about your thoughts on the CEO stepping down. You don't think that's a cause for concern at all?
Yeah, I mean, there's been people worried. Why is he going? What does he know? And people have personal decisions, in their lives, and they move on with their careers. They retire, So like, I would not think, oh, he knows about some hidden time bomb and he wants to get out of Dodge. People always could find reasons to be nervous. Newmont's the biggest gold mining company in the world. I think they're in great shape. I think they're going to be going on a buying spree. So yeah, you might make more money if you know the companies they're going to buy, but they're going to really expand their production base because they're going to have the cash flow right now to make some great acquisitions.
The tobacco company pulled up this year and they've gone up. Do you still like these tobacco companies at these prices?
Yeah, I do. I like tobacco stocks. Not that I think people should smoke. I don't. But I know they're going to smoke. And as long as they're going to smoke, I might as well cash in on it. I mean, I think they're good businesses. And I think that people are going to smoke more when times get bad. They're not going to smoke less. And I think the cigarette companies have pricing power. I think that smokers are going to, they're not going to quit smoking if a pack of cigarettes gets more expensive. I think they'll cut back on something else to afford the cigarettes. And the stocks are not expensive.
I'll let you go in there.
Like British American Tobacco, British Tobacco is 11 times earnings. Philip Morris International is 21 times earnings, a little bit more expensive. But the companies are, they're good. Let me see. Japan Tobacco is 17 times earnings. Anyway, who's up next?
Hey Peter, this is Drew.
Yeah.
Hey, so I own Bitcoin. I own the S&P 500. I do not own gold. The way that I see it is just purely from like a returns perspective, looking at anything longer than, let's say, 6 months or so. So even if you go out to just over a year, Bitcoin has vastly outperformed gold. And if you look at like a 10-year time horizon, gold is averaging about 14% a year, while Bitcoin's averaging 74% a year. And with the S&P 500, that's even beating gold if you count for dividends being reinvested, which is over 15%. And so I'm trying to understand why gold should have a place in my portfolio.
Well, first of all, if you just have stocks and Bitcoin, your stock for now, Bitcoin and stocks move in the same direction. And not only do they move in the same direction, they move in the same direction on the same days. So if stocks are going up, Bitcoin is likely to go up. If stocks are going down, Bitcoin is likely to go down. Whereas with gold, you do also have a negative correlation. Like look at Friday. Everything went down, but gold went up. So it's always good to have in your portfolio a negatively correlated asset, an asset that can go in the opposite direction of the rest of your portfolio so it can act as a hedge, as a stabilizer. And so if you just got stocks and Bitcoin and no gold, on a day like yesterday, you had nothing that went up. Everything you had went down. But if you had some gold, it would reduce the overall volatility. But when you look at the performance of Bitcoin, to me, you're just looking at a mania. And so you can't really draw anything from the fact that Bitcoin has gone up so much in the past and extrapolate that those returns are going to be repeated in the future. I mean, I think when the past performance of Bitcoin is irrelevant to what it's going to do in the future. In fact, if anything, the fact that it's gone up so much means it's likely to go down a lot in the future, not continue to go up, but go way down. Whereas gold is a real commodity, it's a real asset, it has real buyers, there's real users, you got central banks that need gold, but you have industries that need gold. Nobody needs Bitcoin. They'll buy it if they think they're going to get rich owning it, but when people no longer think they're going to get rich buying Bitcoin, they're not going to buy it. And then the people who own it can't sell it because there's no new suckers to buy their token. So, what I would do if I were you is to say, hey, you've owned Bitcoin, great. You don't have to sell it all. You can play with the house's money and let it ride if you want. But I would sell some of that Bitcoin and buy gold. And as far as your stocks, I don't know what your stock portfolio is like, but if it's all in U.S. stocks, I would, lighten up considerably and start looking internationally, looking at foreign stocks where I think you've got much better valuations and much higher dividends. And so I think you've got a better, return prospects going forward.
Yeah, that's a good point about the correlation. I see that the gold correlation to the S&P 500 is 0.09, where Bitcoin is 0.32. So there's definitely more correlation with the price movement of Bitcoin and the stock market versus something like gold, which acts as a much more different hedge. I think that's definitely a valid point.
And the good thing about gold too is gold doesn't go down when the stock market goes up. It's not like your gold goes down when stocks go up. Gold's at an all-time record high as stocks are on an all-time record high. So, you're not, you can have a hedge by buying gold, but you don't necessarily lose on your gold if your stocks keep going up. You can make money on both. But I think if your stocks go way down, gold could go down. I think it'll go down a lot less than stocks. Bitcoin will go down a lot more than stocks, as you saw on Friday. But you also could have a situation where stocks go way down and gold goes up, like we saw on Friday.
Definitely, yeah. And when it comes to, allocation for someone that's thinking about just hedging with gold, what would you suggest? Maybe 10% of your portfolio or something like that?
Oh, at a minimum, kind of that 5-10% in physical gold. But right now, I'm way overweighted. And I'm telling people, because I think that gold mining stocks, even now, are still such a good bargain compared to the rest of the stock market, that I think the risk return still favors the miners, and particularly now some of these smaller ones. That's why, people buy into my fund, the Europe Pacific, EPGIX. You'll get a real good portfolio that will not just include these big names that are, really killing it this year, but a lot of the smaller names that may be killing it over the next few years.
Definitely, yeah. I see the use case for sure. I've been on the fence when it comes to deciding if I actually want to, put a little bit of an allocation into gold. I see the use case for sure when it comes to like a hedge. But in terms of placing a majority of your portfolio in something like gold, I still don't see that just from a pure performance perspective.
I never said the majority of your portfolio in gold, although I have the majority of my stock portfolio only in gold and silver mining stocks. So that's true for me, and that's just a personal decision that I've made. And at this point, it's more than half. It's probably closer to 70% of my portfolio. Not because I've bought more gold stocks recently. I haven't. It's just because they've gone up so much relative to the other stocks that I have that have also mainly gone up. They just haven't gone up as much, as my gold stocks. Like obviously, the gold portion of my portfolio was up, went up today because gold stocks are up so much compared to everything else I own. But I just think that that's the big opportunity. And again, I think that these gold stocks are going much, much higher than they are now. in a way, it may be a little bit similar to the early returns on Bitcoin. It's not going to be as much as Bitcoin. It's not like, people bought Bitcoin for $1 and it went to 100,000. I mean, you're not going to get something like that, unless there's hyperinflation, in which case it doesn't mean anything, right? The numbers don't mean anything in math, real hyperinflation, right? Where everybody's a billionaire, right? So what difference does it make? But there are people that bought Bitcoin at 300, 1,000, and then, saw a gain 10,000, 20. I think those kind of gains could happen in gold stocks. I mean, people could get 10, 20 times their money. Some stocks could go up 50x. I mean, there will be some that do that. Some of these smaller ones, I'm sure that there will be some smaller ones that do that. I mean, some small company that all of a sudden discovers a bunch of gold, right, that it didn't have, and now all of a sudden, it just goes ballistic. I mean, that's going to happen. Obviously, though, it's not going to happen to all of them because a lot of these gold exploration companies will never find any gold. That's the problem.
Got it, yeah. And just one final thought, and then I'll hand it off to someone else. Just looking back at the last 10 years of returns here, just a kind of fun thought experiment. You put $10,000 into the S&P 500, silver, gold, and Bitcoin. Silver is actually at the bottom end of that at $32,000. Then you've got gold at $35,000. S&P 500 at $38,000, so just slightly above that. And then you look at Bitcoin, and that's at 2.6 million. I
mean, obviously, but the thing about Bitcoin that people forget is Bitcoin's real peak was November 2021, and it's more than 20% down from that point 4 years ago in terms of gold. So the gains in Bitcoin were made before 2021. That's where the big gains were made. But most of the people who own Bitcoin today didn't buy it until after 2021. So it's just a small number of people that made all this money in Bitcoin. Most people didn't make that much money in Bitcoin, and they may have made more money if they bought other things. But the problem is, when the bottom drops out of the market, a lot of these people are going to lose a ton of money in Bitcoin. And even some of the guys that got in early on are going to end up losing money if they didn't sell and they kept buying and they averaged up their price. That's like, you look at Michael Saylor now, he just announced his last purchase for MicroStrategy. And so his average cost on Bitcoin is now $74,000. Now, yes, he still looks like he's smart because Bitcoin is $115,000. And he bought it at $74,000, so he's got it better than a 50% paper profit. But when he first started buying Bitcoin, it may have been closer to $10,000. I forget exactly where it was when he did his first buy. So let's say Bitcoin sells off to $50,000. Even though he started buying it at $10,000 and it's 5 times what he started buying it at, he'll be underwater on his entire position. He'll be down billions and billions of dollars because he averaged up. And ultimately that's going to happen. I mean, Saylor is going to have a big loss on his Bitcoin. Then the question is, when is he going to be forced to sell it? Because that's when the market really implodes. But of course, when the market senses that he's going to have to sell, it'll implode just anticipating it. But I actually think the big implosion of Bitcoin is going to be when we get mass exodus out of the ETFs. I mean, just like for a year, we got a lot of selling out of gold ETFs. Gold went up anyway because central banks were buying gold as fast as retail investors were selling it to get into Bitcoin. But when you get all the Bitcoin ETF buyers who want to sell, who's going to buy that Bitcoin? No, I don't know. Nobody. So there is a huge crash coming in Bitcoin. No, I mean, what we saw on Friday is just a taste of what's coming. Because the ultimate collapse is going to be bigger than that.
Yeah,
and it ain't coming back.
What we saw on Friday, it was just a result of too much leverage in the ecosystem. I personally have not used any leverage, so I'm sitting by here. And Bitcoin's price is slowly catching up, or actually quickly catching up, I should say, back to where it's been, around 120K. But yeah, that was just a massive, deleveraging type outflow that happened.
Well, there's leverage. There's leverage in gold too. Why did it happen in gold? People are leveraging gold.
The key is the volatility. So because Bitcoin is so volatile, that is going to wipe out a lot of leverage pretty frequently, which is why I would never recommend to use any leverage in an already volatile asset.
Well, there's a lot more leverage in the system than you may know, and it wasn't all flushed out. Because one of the things the crypto community has been doing is they're trying to promote crypto as security for loans. I mean, that's this whole big move is they want Bitcoin to sit in other cryptos as a financial layer that enables loans. And that's MicroStrategy. That's Michael Saylor says, don't sell your Bitcoin, just borrow against it. Take out loans against your Bitcoin. So there's probably a lot of leverage in the system that we haven't even scratched the surface in shaking that out yet. And it will happen. It's just going to take a much bigger drop in Bitcoin to do it. Like some of these altcoins, they went down 60, 70, 80% and flushed people out. Probably not that many people got flushed out of Bitcoin unless they were crazy leverage, like 10 times leverage, 20 times leverage, tight stops. But there may be a lot of people that own Bitcoin. Let's say somebody has $1 million of Bitcoin and they've only borrowed 300,000 against it, 400,000. The volatility from Friday, wasn't a big deal for them. But you get a bigger drop in Bitcoin, and all of a sudden it will be.
Yeah, so I'm of the opinion that unless we have that exponential parabolic rise that you typically see before those huge crashes in Bitcoin's price, the price isn't going to crater. We haven't seen that parabolic move yet.
What do you mean we haven't seen a parabolic move yet? Bitcoin went from nothing to 110,000. That seems pretty parabolic.
Are you familiar with the 4-year cycles that we've seen this far in Bitcoin?
Yes, I know there are 4-year cycles, and that doesn't mean that those 4-year cycles are always going to repeat.
That's true, yeah, and especially reflecting the price in terms of 4-year cycles. But there is the 4-year cycle of the halving that occurs every 4 years, and that's a predetermined schedule based on the.
Yes, but it doesn't mean the price is going to go up just because of the halving. It can crash.
That's true, but what the halving does is it reduces the amount that is being able to be mined by Bitcoin miners, and so you have a forced kind of supply crunch every 4 years. And,
but remember, there are two factors. There's the supply and there's the demand. And if the supply goes down, but the demand also goes down, and maybe the demand goes down by more than the supply goes down, that's a big problem for Bitcoin.
That would be, but the way I see things, it's the demand is only going up from here. You see more institutions, more countries.
Why is it only going to go up? Why can't it go down?
It could go down, and I'm not saying it's with 100% certainty, but you're seeing more institutions, more countries, more nation states, more private companies, more individuals, especially with the regulatory clarity that's happened over the last couple of years. And now there's the exchange-traded funds, which has legitimized the asset even more in the financial markets.
Well, I would agree to an extent that there are more people trading in Bitcoin than traded it before. So you have more people gambling in the crypto casino. But the appetite for that could change very quickly. And, you now have a lot more Bitcoin that's owned by speculators, whether they think they're investors or speculators. So it's not a lot of diehard hodlers who are trying to opt out of the fiat system and who, own the Bitcoin, not your keys, not your coins, and, they think in terms of Bitcoin or how much Bitcoin that I have. I say you have a higher percentage of people now who don't think about how much Bitcoin they have. They think about how many dollars they could get when they sell their Bitcoin. And they're trading it like they trade any other asset. And so because of all the hype and all, especially with Trump and the Bitcoin president, strategic reserve, a lot of people decided they wanted to buy Bitcoin because they thought they could make money buying Bitcoin. They thought the price would go up. And so that's where the demand has come from. But I think that as the bloom is off that rose, as Bitcoin continues to trend lower, which it's been doing, especially versus gold, I think a lot of the people who came late to the Bitcoin party are going to leave. And I think there's going to be a big collapse in the demand. And there's not enough, diehard believers to sustain Bitcoin at $110,000 a Bitcoin. I mean, not even close. I mean, is there enough to sustain it above zero? I guess. But, there's not enough to sustain it anywhere near the current price. And then eventually, even the diehard cryptos that have 100% of their money in Bitcoin, one of these days, they're going to need to sell that Bitcoin because they're going to need to spend the money on something. And so, the air is going to come out of this bubble very fast when it ultimately comes out. And there are a lot of people that just, they're conditioned. Every time Bitcoin has gone down, it's come back up. And that's true. Every time it's gone down, it's come back up until the last time when it doesn't. And, something can do something 10 times in a row, and that doesn't mean it's going to do it the 11th time. And if it does it the 11th time, it doesn't mean it's going to do it the 12th time. But people can, get lulled into a false sense of security that if they just ride it out, they're going to get rewarded. And it works until it doesn't. And the problem is you never know when the crash is the last one, right? You don't know until it's too late.
Fair point. Yeah, I think ultimately we're on the same team, just kind of thinking about it, thinking of it in different terms. But yeah, essentially Bitcoin and gold has no top price because fiat currencies have no bottom price. They're going to keep printing more and more dollars as time goes on. So I appreciate your insights, Peter. Thank you for your time.
Yeah, although the top price on Bitcoin is a function of the greater fool. And yes, you don't know, when you're going to run out of greater fools. And so in theory, Bitcoin doesn't have a ceiling, but in practicality, it does. I mean, I think it does have a ceiling. But right, I mean, gold doesn't have a ceiling because the dollar doesn't have a floor. But gold has a ceiling in real terms. So there's only so high gold's going to go relative to copper, relative to oil. And by the way, oil is very cheap right now relative to gold. I mean, you can buy more barrels of oil with an ounce of gold than you can at pretty much any other point in time other than a few months in COVID. And that's one of the reasons that I've been putting more of my own money into energy, into oil related, because I just think that, it's cheap. And it's nice to buy things when it's cheap. But yeah, there is a relation. So gold, there is a limit because gold is relative to other commodities. But relative to the dollar, gold could be infinite. And of course, it can also be infinite in terms of Bitcoin, right? Because ultimately, nobody may want a Bitcoin. And so if nobody wants Bitcoin, then the value of Bitcoin is also zero.
Hey, Peter, could I ask you a question about prospect generators, and are you invested into any of them?
What's a prospect generator?
Kind of like exploration companies that go out and find mines and then sell them to the mining companies and then just retain a royalty or streaming of it.
Well, I have invested in many royalty and streaming companies, and I own exploration companies. I mean, if you're talking about what you're sounding like is maybe if it's even smaller than that, where
very small,
like prospectors are trying to get a claim and then turn around and sell it to another company that could develop it.
There's a couple of companies that EMX. I don't know if you are able to pull it up in front of you, but they're recommended. They're from like Adrian Day talked about them, and then Rick Rule has talked about some of them. And I just didn't know if you had any of them.
Yeah, and there's an interesting company that we recommended to. I have a newsletter that I write with my partner James Hickman. It's called Strategic Assets, and you can subscribe to it at shiftsovereign.com. It's not that expensive, in the scheme of what paid letters. But I know one of the stocks that we recommended was one of these. They like sell the prospectors the picks and shovels from the mines. But one of the things that was really interesting about it is they also take stock in their customers. And I thought that was, they were like a hedge fund almost, because they have a good idea, because projects, right? So if I'm selling a mining company drilling equipment and stuff like that, and I'm down in the trenches and I kind of have an idea what these guys got because I'm supplying them with the drilling equipment, if they're willing to accept stock as payment, they must have a pretty good hunch that the company's going to be worth something, or they wouldn't be accepting it. So I thought it was like a really interesting company, because not only do I think the earnings were really going to grow, because, you know, they're going to be selling a lot more picks and shovels when a lot more people are looking for gold, but that they were accumulating a portfolio of junior mining companies where, you know, they were kind of like almost like insiders in knowing like which companies are most likely to succeed, because those are the ones where they're willing to take stock. But yeah, we're finding a lot of these really small companies in the mining space, and a lot of these are too small to even buy in our funds, right? Because we need, even on the smaller ones, we need a lot of liquidity to buy them in my mutual fund, because we also have to buy enough to make a dent. And, you know, if I've got, you know, my gold fund is still pretty small, but let's say I've got, we have over $500 million in there. So if we want to buy a stock and it needs to have an impact on the portfolio, I got to put $5 or $10 million into it. But some of these stocks that are really good values, you can't buy 5 or 10 million. You know, but some of my subscribers to this letter, yeah, you know, they can put, you know, $5,000 in it, and if 100 people put in $5,000, okay, you know, that's doable. You know. But these things could be really good. So that's another thing that people should consider doing. And first of all, everybody on the Spaces should subscribe to the free newsletter, right? You got no excuse for that. We put out a lot of free content, and you go to shiftsovereign.com and sign up to get my free letter. But the free letter doesn't really have investment picks specifically. It has a lot of other information. But we have strategic assets that is specifically designed more to provide investment research to help people who are, you know, do-it-yourselfers who are not necessarily my clients in asset management. You're just looking for research, you're looking for information to get ideas. You know, that's what we do. We give you investment ideas, you know, rather than paying a stockbroker to give you an idea. You just have this letter, and we come up with interesting ideas that you could incorporate into your investing.
And so, like, for like a long time play in like the gold sector, would you suggest like a bigger company like FNV or something like MTA or like Sandstorm, something that's a royalty streaming company that like gives them money residually?
Yeah, I mean, the royalty business is a great business, and kind of what we have in our gold fund, the Europe Pacific Gold Fund, is we've overweighted the royalty companies, and then we've overweighted the really small exploration companies. And so we're kind of offsetting the risk of the exploration companies with the royalty companies. But what we've underinvested in are the companies that have actually done the best this year, which are like the regular, larger producing companies. We own all those stocks. It's just that we underweighted them relative to the GDX or the GDXJ. So we may only be up 110% this year, whereas the GDX may be up 130%, or whatever it is. So we've given up some of the upside. Now, obviously, with the benefit of, you know, hindsight, you can see that a lot of these smaller stocks that we owned haven't moved yet, and the royalty companies, you know, haven't moved as much recently.
No, right.
But that's because they've done so much better. So you look at like how a Franco-Nevada or a Silver Wheaton has done over the last 20 years, 10 years, and compare it to Kinross or IM Gold, they've killed them. But over the past year, the IM Golds and the Goldfields and the Kinross have done much better than the Francos and the Wheatons, right? Little companies that we own in our gold fund, I think they're going to crush it maybe next year or the year after that. You don't know exactly when they're going to kick in.
Right.
But one of the things that I think the big companies like the Newmonts and the Barricks are going to do with their cash hoards that they are earning is they're going to buy some of these little companies, right? And, you know, they're going to pay a lot more than the current market price to get them. But it's going to be money well spent, because as the previous caller said, these are gold mines. They're in the business of mining gold. They can't run out of gold. They have to replace the reserves they mine. And they can do it two ways. They can explore, they can go out and prospect companies that already have the reserves. And I think that's going to be the much better way to do it because they can buy these companies still cheap.
And can I ask you one last thing? I know you said oil. What's your thoughts on uranium?
Look, uranium has been a big trade. You know, there's a lot of spec money in uranium, so it's going to be a lot more volatile. And it's always good to load up on those kind of stocks when they've had a big correction. I mean, right now we're on the highs. I mean, those stocks. You know, they had great days today. 52-week highs. I mean, look at Cameco, which is the biggest one. You know,
right. It's going nuts.
And there's a lot of hot money in there too. There's a lot of Trump trade money that has been going into uranium. So, look, I don't know. You know, I think there could be a big pullback at any point in something like that. But the story is not going away. It's real, I think. But I think there's less risk in gold and silver.
Okay.
Because, you know,
I've been listening to you for like 10 years, dude. I've got my whole thing. I've been trusting you, man. So, like, I'm just looking at the next thing. You said oil, and I'm just wondering what else maybe you're thinking about after this move in the gold.
Yeah,
and where
we
you plan
own
on
a lot
moving
of
after
oil stocks in our portfolios, and you know, we had been underweight oil, and we're kind of be moving towards a more of a neutral to overweight. But yeah, I mean, it's just out of favor. So many people, you know, think that oil is going to go down, and you know, Jim Cramer was just on 2 days ago predicting an oil crash, and I was like, that's good enough for me.
We're buying.
He's predicting oil crashing. You got to be buying it.
All right. Well, I appreciate talking to you, man. Thank you very much. You guys have great books. You have great books. Adrian's got great books. You guys should check out their stuff. Thank you very much. Have a good day.
All right. Is that Drew trying to speak or?
Oh, I was just laughing at your
Funky Nerd?
there.
Funky Nerd or? I'm just waiting for my wife to get home with dinner. That's why I'm still talking. Hello?
Yeah, I mean, I guess I'll hold on.
Just texting her to let me know when she's home so I can eat. Okay, who's up next? Quick, before I got cross this guy, cross somebody. JB also, I'll add you. I have crossed. You guys unmute yourselves. Like whenever I put you up as a speaker, the first thing you got to do is take yourselves off and mute. Otherwise you can't talk.
Hey Peter, Jordan here.
Hey Jordan.
Hey Peter, longtime fan, going all the way back to the Occupy Wall Street days.
Okay, yeah, I think that was about 2011-ish.
Yeah, about 12 years ago or so. Longtime fan. Just want to make a quick comment here and then ask you a question if I may.
Okay.
The comment is I'll just give you some little bit of insight on the ground game here. I'm obviously just a small retail investor here of some bullion, mostly just going through Costco. That seems to be the best place to buy it in Canada, especially if you're a member and you have their MasterCard. Between the two, you can get 5% off their price, which is usually 7 to 10% over spot. So it's not so bad because you can just walk in and take delivery. But as of this week, someone as myself who buys about 10 ounces a week, there's nothing in stock. So I went over to my second dealer, which is Toronto Dominion Bank, which is always a sure thing. You get like 1 or 2% off if you're if you have one of their debit cards. And I went on there today. I was like, oh, nothing on Costco. Let me jump over to TD, and there's absolutely no silver available.
Yeah, well, that doesn't surprise me.
Of course, there's like Royal Canadian Mint and stuff, and they have their upcharge. But I mean, as far as TD, the bars are sometimes sold out, but when you're looking at stuff like commemorative coins, like Black History Month coin or like Toronto Blue Jays coins that are like 70 to 80% over spot, there's none of those either. So it looks like people are buying everything.
Yeah, well, you never want to buy any of that crap, right?
Obviously not, no.
Yeah, because all the stuff that they say is commemorative, it's just a waste of money, especially with these. And I see these guys, these infomercials on television all the time, selling overpriced crap. I mean, that's why I set up Shift Gold, is because so many people were getting ripped off. And one of the reasons that so many gold companies were ripping off their customers is because they don't have a lot of customers. I mean, not that many people were buying gold. And so a lot of gold companies, the only way they can make money is by ripping off their customers. But I never needed the money for my gold business. It was always a side business. And I always kept the markups low. And I never sold any of that crap. Because my goal for Shift Gold is I want people to own gold. In fact, if somebody sends me $100,000 to manage, I make a lot more money off of that than if they take the $100,000 and buy gold. But the reason I want them to buy gold and silver is because I think they should own it. I just don't ripped off by buying it from somebody else, and I sure as hell aren't going to rip them off. So we give everybody a great deal if you go to Shift Gold and buy physical gold. That doesn't mean you can't be. Look, if you want to be a coin collector, and if that's your hobby, yeah, you can do that as a hobby. And if you do it well, and you go to auctions and you do your research, and you buy coins directly at an auction, you might get a good deal and you hold it. But if you buy a numismatic coin retail, your odds of making money are so slim.
Yeah, you're getting killed. And I mean, even if you want to keep it for 5 years and flip it on eBay, by the time you pay the charges. And if you walk into a coin dealer, they don't care what's on the coin. They're going to give you spot value for the weight of the actual bullion itself.
A lot of these. But I mean, there are legitimate rare coins that a collector would want to have in their collection, just like art or sports memorabilia. But it's very different than buying gold and silver to get out of the dollar. No. I mean, if you're going to do that, you just buy bullion. But if you want to buy a rare item because you want to show it off to your friends, or you enjoy, hey, I have this coin. There's only one statue, this sculpture, that is made of pure silver. When I was at the Money Show a few months ago, and it had like $38,000 worth of silver in it when I bought it. It was $1,000. And then now the silver's worth $52,000. And I bought it, and I paid, more. I paid a lot more than the silver for the sculpture. But I really liked the sculpture. I thought it was. I wanted to own it. I have it in my house, and it's a sculpture of an eagle, and it's like very patriotic. He's sitting on. The eagle is perched on a constitution, and
you'll have to put it in the background on your next video.
Yeah, and so, but I knew when I bought it that, look, I'm not making a silver investment here, but I knew worst case scenario, if I ever wanted to sell this thing in a few years, minimum it's going to be worth more than I paid, because I know the silver is going to be worth more than I paid for the whole statue. Even if the sculpture became worthless, which I don't think it will. I mean, I think it does have, I do get more enjoyment out of that silver than a bar of silver in a vault, right? Because this is a beautiful work of art that I think is a statement piece where I have it. And so, just like when you gold, and I like the way it looks, but it's not the best way to invest in gold, but it's already way worth more than I pay. I could sell the bracelet now for more than I paid for it. But if you buy a bracelet that's only 10% gold, like most people, and you go to a jewelry store and you buy a gold coin, gold bracelet, and you pay $2,000 for a gold bracelet that has $200 worth of gold in it. I mean, you're not going to make. You need a 10x move in the price of gold to get your money back.
I appreciate all that, Peter. I'd just like to ask you a quick question before your talented wife comes home with the grub.
Go ahead.
So just to mention on the Occupy Wall Street, just to kind of sidetrack here, in the future, the next couple of years, if there is another meltdown or there's some kind of financial mayhem, and out of those ashes, there is like a sequel to Occupy Wall Street Part 2. Would you be able to, in this age, just to walk down there like you did in your suit and tie without security, or have things just changed?
Yeah, I mean, obviously, look what happened to Charlie Kirk, but I mean, yeah, I think that, I don't know that I would do that nowadays. I don't know that that would be a smart move for me to be able to go out like that.
And I recommend anyone who hasn't seen those videos, they're still on YouTube. I mean, you were down there right in the heat of it, and everyone, there was some heated questions, but everything was relatively cordial back then. I think you paid some guy to hold a sign for you. It was super cool. I mean, there's lots of good
I didn't know it was my brother. I didn't pay him.
You probably just paid this guy to hold this sign and walk around with him, and I was like, that's awesome. That's so
my brother Andrew and I were down there.
Yeah, but for the most part, it was fine. Like, you didn't obviously only so much was caught on camera, right?
Yeah,
so,
I was still engaged to my wife now at the time, and we had a date. We were going on a date, and we went to the theater. So I remember I had a rush from there. We went. I don't remember what show we saw.
You didn't even get home, just take a shower and change. You look pretty sweaty there for a bit.
No. It was It was a play. I don't remember what it was. It wasn't a movie. It was a live theater in New York.
Well, thanks for your time, Peter. That's great. Thank you so much, sir. I appreciate you letting me on the call. And it's actually Thanksgiving here in Canada. So just from my family to yours, happy Thanksgiving, early American Thanksgiving for you, and God bless.
Yeah, it was Columbus Day here, so our bond market was closed. But Canadians that didn't have any chance to buy gold stocks today. They're going to be showing up tomorrow and see some much higher prices than they had. In fact, I think that's notorious that sometimes some of the biggest moves in the miners happen when Canada's shut for a holiday, and they can't buy.
Yeah.
But yeah, thanks for acknowledging my wife. She's got. If you don't know, my wife is a bit of a musician. She does a lot of things, but she's also a musician.
Yeah, I follow her on Spotify. Yeah, it's pretty good tunes there. I appreciate it. Kind of that new wavy stuff.
Her next song is coming out soon. I forget when it drops, in a week or two. She's got like 4 of them up on her channel right now. But you should listen to her on Spotify. She's Laughing Cats is the name of the group.
And just remember that song
videos
Jerk.
are on YouTube. See some of their videos.
And that song Jerk is not about Mr. Schiff, everyone. Just in case anyone asks. It's not about. Okay, God bless Mr. Schiff. Have a good evening.
All right, thanks a lot. Who's next? Anybody? Anybody in the queue?
Just a quick follow-up question to what I was asking about earlier. I was wondering what your thoughts are on gold ETFs for someone like me that might be looking for just a small allocation for just hedging perspective.
Yeah, look, for all practical purposes, they're probably fine, but I still think that people should have some physical possession, especially if we get to a situation where we do have runaway inflation, we have price controls, which means we have shortages and black markets. In order to get things that you need, you may need some silver coins. And it doesn't do you any good to have them sitting in an ETF. But if you've got them in your hand, you could use them.
Yo, Peter, I have a technical question for you real quick. If I'm being heard. Yeah, hey, big fan. So, real quick, I don't know if this has been discussed in this space, but the idea of the U.S. Treasury repricing gold at its actual price rather than the, like $42 that it's currently marked at. I've been trying to get my head around this lately, and it just seems absurd. Like the thing.
It's October 13th. Gold is at a 4,100 an ounce. We're listening to Peter Schiff. This is the Peter Schiff podcast.
Congressional hurdles, but also that the big one that I really don't understand. I don't grok this. Is that it would be this big signal.
It just seems absurd like that.
It's this big narrative signal globally or whatever against the US dollar. But to me, that makes sense because all fiat currencies are valued.
Yeah, I mean, basically, well, here's the thing. So basically, it's just an accounting entry, so it doesn't give us any more money. But yes, if the U.S. were to devalue the dollar, then it would be an admission that the dollar has lost 99% of its value. Because right now the dollar on a book is $8.22. But if they devalue it to its current market price, where now the official gold price is $4,000, that is a massive devaluation of the dollar.
What I don't get is that just says that same thing about every other fiat currency. Like, you could say that the yuan maybe and the ruble lately, like, those countries have been accumulating gold, but like they still can't compete with the dollar in terms of fiat currencies on a global scale. Like, my understanding is that Forex market, which I'm pretty new to understanding how that works, but It's just that everything is, these fiat currencies are traded on the they're valued on the margin in these order books, against each other. So if we're saying that if they were to revalue the gold to what its actual market price is, it's basically just telling the world that all the fiat currencies have dropped in value. That
Really, it's a non-event to do it because it doesn't have any practical purposes. I think right now, like if you wanted to pay your taxes, if for some reason you wanted to pay your taxes, and you were going to use gold coins to do it, they wouldn't give you that much credit because they would give you the official price. If they devalued it, then they'd have to accept it at the new official price. But no one's really paying their taxes in gold coins. If they want to pay their taxes, they're selling their gold coins. But I guess if you have the gold coins, you can pay your taxes without having to sell the gold coins and realize the capital gains tax. But I don't think that we're ever going to officially do that unless we're trying to go back on a gold standard, in which case we have to do that. But there's no practical benefit to the United States government to calling attention to how much value the dollar has lost. But as I said, I mentioned it earlier in this spaces that the proponents of that are promoting it because they think that it's some kind of windfall, that we could use that extra money somehow to pay our bills, to pay down the debt, to buy Bitcoin. No, there is no extra money. It's just an accounting entry. The gold doesn't change. It's the same gold. It doesn't matter what price we want to pretend it's valued at. It's worth what it's worth. And the only way we could really recognize that money would be to sell the gold, which if we sold it now, we would sell it not for $42, but for $4,000. So we either have to sell the gold or we'd have to...
It's October 13th, 2025. We're listening to Peter Schiff, gold's at 4,100 an ounce. Again, it's October 13th, 2025.
Kind of reminds me of that idea of minting those platinum coins.
It's October 13th.
A couple years ago or whatever. But thanks for your answer. That's interesting.
Yeah, that platinum coin idea was also bandied about.
We're listening to Peter Schiff's podcast, October 13th, 2025. Gold's at 4,100 an ounce. This is John Kitover running for the 16th District of Illinois. We have to stop borrowing, we have to stop spending, we have to stop taxing.
Let me just say thank you so much for the advice. I've been an avid listener, and thank you for having me up. The first question is, as a young man living in the United States, seeing everything going on, what would your recommendation be? Would you say look to exit the United States? Would you say look to stay in the United States? How do you see the future of somebody who's, say, 24, 25, 26, living in this inflationary setting? And what would you do if you were that person, knowing what's going on in the markets?
Yeah, look, I don't know. The best opportunities for young people may well lie outside the United States. A lot of it is going to depend on how the U.S. reacts to this crisis. Is it a catalyst for change in a positive direction, meaning less government, more capitalism, more freedom? In which case, it is going to be an excellent opportunity. The reaction is to fully embrace even more socialism, even bigger government, with more regulations and more controls on the economy. Then, yeah, you're probably going to want to leave. It'll probably be so much easier to succeed if you leave the country than if you stay. And the key is, obviously, if you're politically connected, maybe you can succeed here. But, if you don't have the connections, if it's just going to be, you want to work hard and succeed based on your own merit, you want to live in a country where, it's easier to succeed on merit. You want to be in a country that's, has the most amount of economic freedom. That'd be great if that country was America, but it may not be. And it isn't right now. It's not that we don't have any freedom in this country. We still have some. We have more than a lot of countries, but not as much as others. But we could end up losing a lot of freedom in this next crisis. That is the scary part, because we lose a lot of our rights whenever there's a crisis. The government uses that as
This is Peter Schiff. It's October 13th, 2025. Gold is at $4,100 an ounce.
Debt and currency crisis is going to be worse than anything we've experienced. in modern America. And so what the government does, even though the government is going to be responsible for all this, they end up blaming capitalism, and they use it as a way to expand their power.
And then as a follow-up to that, I know you talked a little bit about oil tonight. If you could just talk a little bit about why you think oil is going to increase, and then also if you could let me know whether or not you think it would be an intelligent investment to potentially start to accumulate Chinese RMBs at the thought that they're potentially going to make their currency convertible to gold.
Yeah, I think the RMB is going to go up. I think the Hong Kong dollar is going to go up. It's right now pegged to the U.S. dollar. I think eventually the peg is going to break and the Hong Kong dollar is going to go up, not down.
It's October 13th, 2025. Peter Schiff, podcast, gold's at 4,100 an ounce.
Because I really don't see the downside of the Hong Kong dollar relative to the U.S. dollar. There are a lot of people that think that they break the peg and it'll crash, but I don't think that that's what's going to happen. But the reason I'm bullish on oil is when the dollar really goes down, I think worldwide consumption is going to go way up. I think that instead of loaning money to us and buying treasuries and buying mortgage-backed securities, I think the rest of the world is going to spend more of their money on themselves. And I think when the dollar goes down and other currencies go up, that's going to create a lot of demand for oil, because when the dollar goes down, the oil price automatically goes down because the oil is priced in dollars. So let's say the dollar got cut in half in terms of Chinese RMB. That's basically like oil being half the price. Well, what's going to happen to demand for oil in China if the price gets cut in half? People are going to use more oil. More people are going to buy cars or buy other things that need oil. So I just think global demand for oil in a weak dollar environment is going to go way up. We lose enough extra supply to be able to meet that demand. So I think oil prices are headed a lot higher. And and I still think alternatives. I mean, the world's going to use a lot more energy. Think of all the energy that AI is going to be consuming. Where's that going to come from?
Are you not concerned, though, at all about the risk that the United States may play in suppressing the oil price? I mean, we've already seen the United States with the deal made in the Middle East that's kind of been, put on topic today, that the U.S. very much so does still have control over the Middle East, and now they are also producing a large amount of oil as well. Do you not see any issues with maybe excess supply?
No, because I think there's going to be a lot more demand. I don't know that there's enough supply coming out of the Middle East. But the other problem, too, is, we have a pretty big oil industry here, and our costs
Candidate John, it's October 13, 2025. We're listening to the Peter Schiff Economic Report. Gold is at 4,100 an ounce. Like, share, subscribe.
A lot of bankruptcies and a lot of drilling, shutting down in the U.S. That's going to also decrease the supply. And I don't think, Saudi Arabia is sitting on enough oil to, compensate for the loss of U.S. production if prices are not high enough to be profitable.
Thank you. I appreciate it.
Let's see.
Hey Peter, I have a couple of questions. Thank you very much for the opportunity to be up here. It's an honor. You mentioned, first of all, I think it's amazing for you to be up here like for 4 hours. You should share some dietary tips as well as financial tips. But I'm interested. You said that you think that we could go back to gold standard. I think I was just looking at some of the stats between 2020 and 2022 because of COVID. We printed 40% more money supply, which is called M2. Looking at the facts, it's highly unlikely. What makes you think that we would, despite all the evidence, which is kind of contradicting your beliefs. What makes you think that we would eventually go back to gold standard?
Well, the world always goes back to the gold standard. I mean, we've been on the gold standard for thousands of years, right? That's not an accident. And I know that fiat currencies don't work. Every fiat currency that has ever been used has eventually become worthless. And the nations that have used fiat currencies in the past, went back to gold. And I think that's what's going to happen. Now, you can look at what happened in the past. Very high hyperinflation.
Please don't scroll. I'm just trying.
Gone back to a dollar peg. Like what stops their currency from collapsing was pegging it to the dollar. Right?
I'm gonna restart this live. This is the
When
Peter Schiff podcast.
Itself is no longer trusted. When the dollar is crashing, what are you going to peg your currency to? Now you could say, well, they could use the euro, they could use the yen, but I think in a real dollar crisis, where people have been burned badly in the dollar, and they've seen like the dollar go up in smoke. Are they really going to have a lot of confidence in the euro? I mean, hell, if the dollar can collapse, why can't the euro? And of course it can. Why can't the yen? So I think when the dollar crashes, the only thing that's really left that could work to reinstill confidence and take its place would be gold. That's why when so many people have said, oh, the dollar's never going to lose its reserve currency status. And the reason they think that is they don't think any other currency would be in a position to take its place. And I've always agreed. The euro is flawed. The yen has got its own problems, right? Who the hell are they going to trust the RMB? The Swiss franc is a decent currency, but I don't think Switzerland is gonna be able to fill that void. There's a few other decent currencies that people might have confidence in. But it always struck me that if there's a crisis in the dollar, it's a fiat currency crisis. It's not going to just be a dollar crisis. And so how do you reinstill confidence in your fiat currency? Well, you make it no longer a fiat currency. Back it by gold. And that means now that people can trust that it actually has value, right? There's something real here. We can't just print it at will. The amount is limited by the amount of gold there is. And we set up a rate. This is how much, our currency is worth. And there's X amount of gold behind each unit. And now the market can adjust to that. So I think that's where we're going. I don't see any other way out of it. But it's not like governments are going to go there right away. They're just going to eventually be forced there. But what I do think will happen is that individuals will adopt gold on their own. That's what I think is going to happen with gold tokens. That's why I'm going to do my own. That's why, I'm working on something right now. I'll be talking about it very soon. I don't want to just mention it now because I don't want to get overwhelmed with orders yet. But I am working on my own